ordinary shareholders, earnings attributable to ordinary shareholders. Then you divide by what? Number of ordinary shares. This is how we get the earnings per what? Earnings per share. Earnings per share is always given by the earnings attributable to ordinary shareholders. Then we divide by the number of ordinary shares. But in this case, we are going to look at the International Accounting Standard 33 on how we can get the earnings per share. And under International Accounting Standard 33, the earnings per share is categorized into two. Number one, we have what we call the basic earnings per share, the basic earnings per share, or what we call the simple capital structure, simple capital structure EPS, that we call the basic EPS. So the question will arise is, how do we compute the basic EPS? So when it comes to the computation, for us to get the basic EPS is going to be given by what? The basic EPS will be given by the earnings attributable to ordinary shareholders, earnings attributable to ordinary shareholders. Then we divide by what? We divide by the weighted number of ordinary shares. Ordinary shares outstanding. Weighted number of ordinary shares outstanding. So this is how we get the basic EPS in this case. So anytime we want to compute the earnings per share, the basic earnings per share, we are going to take the earnings attributable to ordinary shareholders. Then we divide by the weighted number of ordinary shares outstanding. So therefore, how do we get the weighted shares? For us to get the weighted shares, if we want to compute the weighted shares, we normally use a table to make our work easier, whereby this table you are going to have the date, because the dates are very important. The date must follow each other respectively. Then from there, we normally talk about the share transaction. Then from there, you have what we call the number of shares. Then we have the weighting factor. And then we have the weighted shares. This is how we get the weighted what? The weighted shares. The weighted shares is given by, you take the share transaction, number of shares, weighting factor, and then you will get finally what we call the weighted share. And in this case, for example, if we talk about our financial year starts on 1st January 2026, so the share transaction will be the balance brought down. Then we are going to have the number of shares here. Then we wait for the number of months that we have in a financial year. And then we will get what? We will get the weighted shares. So when we are talking about the basic EPS, there is some things that you need to know when it comes to the basic EPS. Number one, we have those shares which are issued at consideration. We have the shares issued at consideration. And anytime we talk about the shares issued at consideration, those shares are never weighted. Anytime we talk about the shares which are issued at consideration, you should know that those shares are never weighted. Sorry, those shares are weighted. Those shares issued at consideration, those shares are weighted. And some of the examples of the shares which are issued for consideration are those shares which are issued at what? At the market price. For that case, the shares issued at MPS, those ones are going to be weighted. So you weight using what? The weighting factor. In this case, we normally talk about those shares which were issued and were paid for. The shares which were issued and paid for, in this case, we do what? We weight them. So therefore, we have two categories. We talk about the two categories where we have the shares issued at consideration, and these shares which are issued at consideration, they are weighted. They are weighted using the weighting factor, the weighting factor. For example, if we talk about our financial year, was starting on 1st January 2026, and then the shares were issued on 1st March 2026. Therefore, depending on when our financial year is going to be concluded, therefore you are going to wait until the end of financial year, until the end of the financial what? Until the end of the financial year. You are going to wait them, those shares, until the end of the financial year. Then we have those shares which are issued at no consideration. Shares issued at what? No consideration. Shares issued at no consideration. For these shares which are issued at no consideration, meaning that the company is not going to receive extra finances which can help it to finance its activities, are never weighted. And some of the examples, we have the bonus element in the right issue, the bonus element in the right issue. And how do we come up with this bonus that we are talking about? The bonus element in the right issue. For example, let us say that the market price per share was shillings 20, and the existing shareholders purchased the shares at what we call the exercise price of shillings 15. That means that for every one share, the shareholder is going to enjoy a bonus of how much? A bonus of 5 shillings, or we normally call it a discount. So therefore, this discount that you are going to get for every one share is not going to be weighted. Then number 2, we talk about the bonus issue. And when we talk about the bonus issue, these are those shares which are issued for free. The shares which are issued for free. For example, whereby the existing shareholders are going to be given extra shares for nothing in return. For example, whereby the company agreed to give you 1 share if you have 10. If you have 10 in the company. So this share, the company is not going to get any extra resources. So therefore, in this case, we call them the bonus issue. Other than that, we have those shares which are, we are going to talk about the share split. Share split and what? And consolidation. Share split and consolidation. And when we talk about the share split and consolidation in this case, when we are talking about the split, is where you are going to spread the shares so that you can have more shares. When we talk about the consolidation, is where you are going to bring them together so that you bring them together, you can have a few shares. You are consolidating. For example, you had 3, and then you are told that if we carry out the exercise of consolidation, you are going to have 1 share. So meaning in that case you are consolidating. So these shares, which are either split or consolidated, again, they are not weighted. And also we can talk about what we call the bonus element. Bonus element in what? In the share option. Bonus element in the share option. The bonus element in the share option, again, in this case, they are never weighted. So those 4 items are very important when it comes to the calculation of what? Of the basic EPS. And we have said that for us to calculate the basic EPS, we are going to take the profit attributable to the ordinary shares, then we divide by the weighted number of ordinary shares outstanding. Weighted number of ordinary shares outstanding. So that's all about the basic EPS. That is a small briefing when it comes to what? To the basic EPS. So other than the basic EPS, we have what we call the diluted EPS. We have the diluted EPS, the diluted EPS. We can talk about diluted earnings per share, the diluted earnings per share. And the question that you ask yourself, how do we get what? The diluted EPS. So for us to get the diluted EPS, we normally take the earnings attributable or the profit attributable to ordinary shareholders. Then from there, we divide by the weighted average number of ordinary shares outstanding. Then from there, we add what we call the preference. We talk about the preference dividend. Then we divide by the shares from what? From preference shares. Then we have what? We have the interest. We talk about the interest, 1 minus T. Then from there we divide by what? We divide by the shares. Shares from what? Shares from debt or debentures. Shares from debt, or we can talk about the debentures, and also we add 0. Then here we have shares from what? From share option. Shares from share option. So in this case, that is how we get what we call the diluted EPS. This is how we come up with what we call the diluted EPS. So when we talk about dilution, is the process whereby the company is going to increase what? The shareholders. The number of shareholders are going to increase, whereby they are going to issue more shares. So therefore, we have what we call dilution. And when we talk about dilution, this is the decrease in EPS, where the EPS decreases. And in case the EPS decreases, we normally say the shares have been diluted. That's why the EPS has decreased. And then we have anti-dilution. And anytime we talk about the anti-dilution, here is where we talk about what? The increase in EPS. If the EPS increases, we normally say that the shares have been anti-diluted, meaning that the value of the shares have gone up. Therefore, how can we know whether the shares have been diluted or they have been dilutive? So in this case, first of all, we talk about what we call potential ordinary shares. Potential ordinary shares. And when we talk about the potential ordinary shares, these are the convertible securities which are potential to be converted to ordinary shares in future date. Those securities which are going to be converted into ordinary shares in future date, we call them potential ordinary shares. For example, some of the examples of the potential ordinary shares, we have what we call the convertible preference. We have convertible preference shares. Other than that, also we can talk about what? We can talk about what we call the convertible debentures. Convertible debentures. Sometimes we can talk about the loan notes, and also we can talk about what? Loan stock. The convertible debentures, loan note, and loan stock. Then from there, also we can talk about the share option. The share option. And in this case, those are some of what? Some of the potential ordinary shares. Some of the potential ordinary shares that you need to know. After knowing the potential ordinary shares, now how can we know whether the shares is a dilutive or anti-dilutive? How can you know whether these potential ordinary shares are dilutive or anti-dilutive? By computing what we call the incremental what? Incremental EPS. And how do you get the incremental EPS? For you to get the incremental EPS, you will be taking what? You will be taking what we call the incremental profit. Then from there you divide by what? You divide by incremental what? Incremental shares. You will be taking the incremental profit, then you divide by the incremental shares. In that case, you get what? If the value of the share has gone up or down, depending with the basic EPS that you have. So remember, this incremental EPS, you are going to compare with what we call the basic earnings per share. For example, let's assume that we had a basic earning per share of shillings 2.5, and you have computed your incremental EPS. You have found it is 3 shillings, meaning that there is an increase in what? There is an increase in EPS, and therefore because it has increased, we normally say that is what? That is anti-dilutive. And then if you compute your incremental EPS, and you find that we had a basic EPS of 2.5, and then you find that your incremental EPS is 2, meaning that there is a decrease in what? There is a decrease in EPS. So in that case, we talk about what? Dilutive. When you compare the basic EPS and then you compare with incremental EPS, you find that the value has gone down. We normally talk about dilutive. When you find that the value has gone up, we normally talk about what? Anti-dilutive. We talk about anti-dilutive in this case. Anti-dilutive in this case. Therefore, now, how can you get incremental profit? Is very important. When we talk about incremental profit, when it comes to the what we call the convertible preference shares, For the convertible preference shares, the incremental profit will be the preference dividend. Preference dividend. It is going to be the preference dividend. When you come to the convertible debentures, loan notes, and loan stock, when we talk about incremental profit, in this case, it is going to be the interest net of tax. 1 minus what? 1 minus T. We will be talking about the interest net of tax in this case. Then, when we go to the share option, the incremental profit is always what? It is always zero in that case. And that's why, if you can look at our diluted EPS formula, we have the profit attributable to ordinary shareholders, then you divide by the weighted average number of ordinary shares, plus preference dividend, you divide by the shares from the convertible preference shares, then we have the interest, 1 minus T, then you divide by the shares from the debt, then zero, meaning that for the case of the share option, the incremental profit is 0. Then from there you divide by the shares from the share option. You divide by the shares from the share option. That is how you are going to get the diluted EPS. The diluted EPS. And it's very simple. It's all about understanding. Therefore, after a small briefing about the basic and diluted EPS, now it is the time to go through what? It is the time to go through some of the illustrations. And the illustration I would like us to go through is a question which was set in April 2024. Our illustration will come from April 2024. That is the question that we are going to discuss right now and see whether, if the similar question comes in the exams, are we going to be able to tackle the question? Are we going to be able to tackle the same question? So therefore, we are talking about April. So the question is April 2024, question number. Let us confirm the question number. April 2024, the question for the earnings per share. April 2024, the question for the earnings per share is in April 2024, question number. That is what Mwalimu is trying to confirm. April 2024. April 2024, earnings per share. The question is question number 3A. So our question for discussion is question number 3A. So we are going to look at question number 3A. This is the question that we are going to discuss right now. April 2024, question number 3A. Question number 3A. And this is what we are told. This is what you are told by the examiner. You are told that on 1st January 2023, Tunza Limited had in issue 43,200,000 ordinary shares of shillings 10 per value each, and 12% convertible redeemable preference shares of shillings 10 per value each. The preference shares are convertible into ordinary shares on the basis of 80 ordinary shares for each shillings 100 of the preference share capital. Tunza Limited's profit after tax from continuing operations for the year ended 31st December 2023 amounted to shillings 201,600,000, and the year ended at 1st December 2022, it was shillings 97,200,000. The average market value per ordinary share during the year ended at 1st December 2023 was shillings 20. Additional information. You are told that on 1st April 2023, the company invited the current ordinary share holders to subscribe for a right issue on the basis of 2 new shares for every 3 held at a concessionary price of shillings 15 per share, when the market value on come right basis was shillings what? 20 per share. So therefore, in this case, we are talking about the existing shareholders, and these existing shareholders have been given what? Have been given the right to do what? To acquire the shares at a price lower than what? Lower than the market price. So in this case, they are going to have what? The bonus element in the right issue. Then number 2, you are told that on 1st July 2023, Tunza Limited issued 36 million ordinary shares at their full market price. On 1st September 2023, the company made 1-for-3 bonus issue of ordinary shares using the share premium account. And finally, number 4, we are told that on 1st October 2023, holders of shillings 80 million 12% convertible preference shares exercised their conversion rights. Therefore required, calculate the basic earnings per share for the year ended 31st December 2023. So we have seen the examiner want what? The examiner want the basic what? EPS. How do we get the basic EPS? Is given by the profit attributable to ordinary shareholders. Then we divide by what? We divide by the weighted average number of what? Ordinary shares. Weighted average number of ordinary shares. That is how we get the basic EPS. That is how we come up with the basic EPS. So therefore, in this case, let us come up with a table. And this is our table. So our table is going to have the date. Then from the date, we are going to have the share transaction. Then from the share transaction, we will have the number of shares. Then we have the weighting factor, and then we have the weighted what? Weighted shares. So we have the date, we have the share transaction, then we have the number of shares, weighting factor, and weighted shares. So let us start this exercise of weighting the shares. We start with the exercise of weighting the shares. And what are we told? We are told that on 1st January, they are talking about 1st January 2023, we had the balance brought down, and this balance brought down was how much? Tunza Limited had initial 43, 200 what? 200,000. So we are talking about 43, 200,000. And this one, we are going to wait for 12 out of 12. So therefore here we will have 43, 200 what? 200,000. Then from there, we go to the additional information. Additional information, we are told that on 1st April, so we are talking about 1st April 2023, we are told that the company invited the current ordinary shareholders to subscribe for a right issue on the basis of what? On the basis of the 2 new shares for every 3 shares held. So they were going to be given 2 for every 3 shares held. So therefore, let us have the right issue. So we have the right issue, and this right issue, we normally classify this right issue into two categories. One category is those shares issued at what? We have the shares issued at full market price. We have the shares issued at full market price, and then from there we have the bonus element in the right issue. We have the bonus element in the right issue. So what is the examiner saying? The examiner is saying that in this case, you are going to be given 2 new if you had 3. And the total number of shares were 43,200,000. And the price of the share, we are told that they are going to give at 15, but the MPS is what? The MPS is 20 in this case. So therefore, how many shares are we going to get? So it is 2 out of 3. Then from there we multiply by 43,200,000. Then we multiply by 15 out of what? Out of 20. So therefore, they are going to get 600,000. 600 what? 600,000. Then this one is going to be weighted to the end of the year. How many months are remaining? You can even count using the fingers. We say April, May, June, July, August, September, October, November, December. So our financial year is ending on what? Our financial year is ending on that 1st December. So therefore, we have how many months? 9 out of 12. So 9 out of 12. So therefore, how much are we going to get? We multiply by 9 out of 12. Therefore, in this case, we are going to get an amount of 16, then 200 what? 200,000. 16, 200,000. So that note is well adjusted. Then once we have adjusted that note, we go to the next note. The next note is talking about on 1st July 2023, Tunza Limited issued 36 million ordinary shares at what? At full market price. But before there, we have not computed the bonus. So let us compute the bonus before we go to the next note. And anytime we talk about the bonus, you must think about accumulating, because the bonus is never weighted. So this plus this, so 43,200,000 plus 21,600,000, you are going to get 64,800,000. Then this plus this, 43,200,000 plus 16,200,000, and in this case you get 59,400,000. You will get 59,400,000. Then from there, we need the bonus element. The bonus element in the right issue. How are we going to get the bonus? We were supposed to issue at 20, we issued at 15. So it will be 2 out of 3. Then you multiply by 43,200,000. Then from there you multiply by 5 out of what? Out of 20. So therefore, how much are we going to have? It is 2 out of 3. Then from there we multiply by 43,200,000. Then you multiply by 5 out of what? Out of 20. And therefore, in this case, we have a bonus of 7.2 million. 7.2 million. And remember, the bonus is never weighted. So if the bonus is never weighted, how are we going to get the figure here? By simply cross multiply. By simply cross multiplying. So let us cross multiply. It will be this one, we multiply by this one. So the answer times 59, 400,000. Then from there, we divide by this. So we divide by 64, 800,000. So therefore, in this case, we are going to get an amount of how much? In this case, we will get an amount of 6,600,000. That is how you compute in case of a bonus. So once we have done that, now we can go to information number 3. And the information number 2, not number 3. Number 2 was talking about what? Number 2 was talking about 1st July. So we are talking about 1st July 2023. The 1st July, there was issue. Issue at what? Full market what? Market price. Issue at full market price. And we issued how many shares? We issued 36 million shares. And we are going to wait for how long? From 1st July to the end of the year. That is 6 out of 12. So therefore, you take 36, you are going to get how much? You are going to get 18,000. You will get 18 what? 18 million, sorry, not 18,000. Then from there, we move to the next note. The next note is talking about what? You are told that on 1st September 2023, the company made a 1-for-3 bonus issue of ordinary shares. And I said, anytime you hear about the bonus, you must think about the totals. You must think about the totals. So the totals will be how much? This plus this plus this. So 64, 800,000 plus 7,200,000 plus 36 million. So therefore, in this case, we are going to have 108 million. 108 million. And in this case, we have 59, 400,000 plus 66,000 plus 18 million. And therefore, in this case, we will have 84 million. We are going to have 84 million. Then from there, on this date, which date are we talking about? The date which is talking about the bonus is on 1st September. So therefore, on 1st September 2023, we have the bonus what? The bonus issue. And this bonus issue, you are told that you are going to be given 1-for-3 bonus. So anytime you have 1 share, anytime you have 3 shares, sorry, we are going to give you 1. So you multiply by 108, 108. So therefore, how much are you going to get as the bonus? So it is 1/3 times, then you multiply by 108 million. So therefore, in that case, you are going to get an amount of 36 million. You get 36 million. And remember that the bonus is never weighted. And if the bonus is never weighted, again, we are going to do what? To cross multiply. So you will take this 36, you multiply by 84, then from there you do what? You divide by 108 million. So therefore you will get how much? So this is 36 million. You multiply by 84 million. Then you divide by what? 108 million. And therefore you are going to get 28 million. You will get an amount of 28 million in this case. You are going to get an amount of 28 million. Once you get 28 million, the next note you are told that on 1st October 2023, holders of what? 80 million, 12% convertible preference shares exercise their conversion right. So now we talk about the conversion, and this conversion is on which date? It is on 1st October 2023. There is what? Conversion. We talk about the conversion. And remember the conversion, in the first paragraph we were told that you are going to be given 8 ordinary shares for every shillings 100. So we have ordinary share capital, ordinary shares and preference. So therefore we are told when you had shillings 100 what? For each shillings 100 preference share capital, you are given how many shares? They were talking about 8. Now what about shillings? Take 12 million times what? 12 million times 10. We are going to talk about 120 million. So what about 120 million? So the 120 million, you are going to take 120 million. So when we cross multiply, it will be 80 times 120 million. Then we divide by what? We divide by 100. So therefore, in that case, we are going to get how many shares? How many shares are we going to get? Because this is what the examiner has told us, that we are told that the preference shares are convertible into ordinary shares on the basis of 80 ordinary shares for each shillings 100 of the preference share capital. So therefore, what about 80? Sorry, they were 80, not 100. So we talk about 80 here. So for the 80 million, so therefore it will be 80. We multiply by 80. Then from there times what? Times a million. So therefore that you get, you are going to get how much? It is 80 million. Then we multiply by what? 80. Then from there you divide by 100. And in that case you are going to get 64 million. You get an amount of 64 million. Then from there we wait. The conversion is weighted. And this conversion, we are talking for how long? We have October, November, December. So we have 3 out of 12. So therefore it will be times what? Times 3 out of 12. And therefore in this case, we are going to have an amount of how much? An amount of 16,000. So therefore, our total weighted shares are going to be how much? And this here, we are going to get the balance what? The balance carried down. So our balance carried down will be 108 million plus 36 million plus 64 million. So therefore the total will be 208 million. 208 million. And this one we have how much? This one is 84 million. We add 28 million. Then we add 16 million. And therefore we are going to get how much? In this case, so 84 million. We add 28 million. Then we add 16 million. And therefore we have 128. So 128 million in this case. So that is what you are going to have as the what? As the weighted shares. Whatever we have computed is the weighted what? Weighted shares. That is how we are supposed to compute the weighted shares. Once we are able to compute these weighted shares, now the exercise becomes easier. So therefore, how do we get the basic EPS now? The basic EPS, we are going to adjust for this year. So remember we are talking about 2023. So if we adjust the year 2023, how are we going to adjust? We need the profit after what? Profit after tax. And the profit after tax from continuing operation, we were told is how much? How much? For this year, 2023, amounted to 201, then 600,000. Then from there, we are going to raise what? The preference. We raise the preference dividend. So let us compute the preference dividend. How are we going to compute the preference dividend? Remember, before the conversion, the total amount was how much? The total amount was 120 million. So 120 million, then we multiply by the interest rate. The interest rate we were told is how much? The interest rate in this case, we were given 12%. So 12%, so we talk about 12%. Then from there we multiply by a period of 9 out of 12. So therefore, how much are we having? So it is 120 million times what? 0.12, then times 9 out of what? Out of 12. So therefore, we are going to have an amount of how much? An amount of 800,000. And then from there, after conversion, we converted 80, we remained with what? With 40. So therefore, we need this 40 times 12%. They are still going to enjoy the interest. Then we multiply by a period of what? 3 out of 12. So therefore, how much are we going to have? It is 40 million times 0.12, then times what? 3 out of 12 in this case. And therefore, in this case, we are going to have an amount of 1.2 what? 1.2 million. 1.2 million. And therefore, our profit attributable to ordinary shareholders is going to be an amount of how much? It is 201,600,000 minus 800,000 minus what? 1.2 million. Therefore, we are going to have 189, then 600,000. Then from there, now we can get what? The basic EPS. So our basic EPS will be 189,600,000. Then we divide by what? We divide by the weighted shares. And the weighted shares were 128 million. 128 million. So therefore, our basic EPS in this case is going to be how much? We divide by 128 million. And therefore, we have a basic EPS of shillings what? 1.48 per share. 1.48 per share. So that is how you come up with the basic EPS. Once you are able to get the basic EPS, now we can go to Roman 2. And Roman 2, they wanted what? Roman 2, they wanted to calculate the restated EPS. In this case, they need the restated what? Restated earnings per share. The restated earnings per share. We normally start with the weighted what? Weighted shares. And our weighted shares in the previous year, we have no more information. It will be the same as what? The same as the balance brought down, which will be 43,200 what? Thousand. And therefore, you effect whatever that happened in the year in the current year that never happened in the previous year. Like for example, we have what? The bonus element in the right issue. So we talk about the bonus element in right what? In right issue. So therefore, how was the bonus issued? The bonus was issued, so out of 64, so for 64,800,000, they were given how much? They were given a bonus of 7.2. Now the question will be, what about 43,200,000? They are going to get a bonus of how much? So therefore, that is how we do the conversion exercise. That is how the conversion exercise is going to be. That is how the conversion exercise is going to be. Yeah, I can see there is a question whereby one of the students is talking about 1/3. So I'm not sure which 1/3 are you talking about. If it's about this one, where was it? This 2/3. If you go to note number 1, you are told that basis of what? 2 new shares for every 3 head. You are going to be given 2 new shares for every 3 head. And if you are talking about the bonus issue, then that is correct. It is 1 for every what? For every 3. If you are talking about that, it is 1 for every 3. So I hope your question have been answered. Let us go to this exercise. So we cross multiply. It is going to be 43,200,000 times 7.2 million. Then we divide by what? 64,800,000. And therefore, in this case, we are going to get 4.8. So here we have 4.8 what? 4.8 million. Once we get 4.8, first we get the total because we have the bonus issue here. So the total will be how much? The total will be 43,200,000 plus 48, and therefore you are going to get a total of how much? A total of 48 million. So we have 48 million here. Once we get the 48 million, then the next thing will be what? Will be the bonus issue. So let us go to the bonus. We started with the bonus element in the right issue, and then we have the bonus what? The bonus issue. And what about the bonus issue? The bonus issue, if for 108 million, they gave how many shares? In this case, they gave 36. There is no even reason why we should use that format. We can just go straight away. And the straight away is that the bonus, you are given 1 share for every what? For every 3. The question will be, what about 48? What about 48 million? How many shares will be? So it will be just 48 times what? Times 1 out of what? Out of 3. And here we are going to get 16. We will get 16. And therefore, in that case, we are going to have a total of how much? Plus what? Plus 48 million. Therefore, the total will be 64 million. The total will be 64 million. Or you can do this. Also, you can take this. You can say that 108 is giving you 36. Now, what about 48? So you will take this one times 48. So it will be 36 million times what? 48 million. Then from there you divide by what? 108 million. And still you are going to get an amount of how much? Still you are going to get an amount of 16. So once you have gotten that, now we can get what? The restated EPS of 2022 as of what? 2023. So how are we going to get this? In this case, again, we are given the profit after tax. Profit after tax of how much? We are given a profit after tax by the examiner of how much? 97,200,000. We are given 97,200,000. Then we can compute what? The preference dividend from the total. The total was 120 million, then we multiply by 0.12. Therefore, we are going to get here 14,400,000. So therefore, our profit attributable to ordinary shareholders will be how much? In this case, it is going to be 97,200,000 minus the answer. Then we are getting 82,800,000. 82,800,000. Then from there, we can get our basic what? Not basic, but restated EPS, where we are going to take 82,800,000. Then we divide by what? We divide by 64 million. Therefore, how much are we going to get? So we divide by 64 million. In this case, we are going to get shillings. We will get shillings what? 1.29 per share. 1.29 per share. So that is how you come up with the basic what? That is how you come up with the restated EPS. That is how you come up with the restated EPS. And once we are able to come up with the restated EPS, the final category will be for us to get the diluted what? The diluted EPS. The final category is for us to compute the diluted EPS. And for the diluted EPS, before you can come up with a formula, the formula that I gave is what we call just the normal formula. But the formula can change depending with the potential ordinary shares which are available. The ordinary shares can, the diluted EPS, the formula can change depending with the ordinary shares, not the ordinary shares, the potential ordinary shares which are available. So we are in Roman 3. This was Roman 1. Then whatever we did here is Roman 2. Now we go to Roman 3. And for the case of Roman 3, we are looking for the diluted EPS. And for the diluted EPS, we have said it is going to depend with what we call the potential ordinary what? Ordinary shares. And like in this case, from our question, the potential ordinary shares that I saw, we only had one. And this is what we call the convertible preference. Convertible preference shares. And for you to find that this security will be potential ordinary shares, they must be convertible. You must look for the word convertible. In that case, it means that those securities are what? Those securities are potential. So we only had one. Therefore, if we only had one, our formula for the diluted EPS is going to be given by what? Is going to be given by the profit attributable to ordinary shares, then plus what? Plus preference dividend, then we divide by what? We divide by the weighted shares, then we add what? We add the shares from what? From preference. Shares from preference. So that is how our formula is going to look like. That is how our formula is going to look like in this case. That is how our formula will look like in this case. So therefore, let us go straight away. We go straight away to this. So therefore, remember we say that we start by getting what? Incremental EPS, which is given by the incremental. It is given by the incremental what? Incremental profit. Then from there we divide by what? Incremental shares. So therefore, let us start with incremental profit. We start with incremental what? Incremental profit. And our incremental profit will be, they are going to be potential for 9 months before the conversion, which is the same as what? This dividend here which we have here. So it is like saying 120 million. Then from there you multiply by 12%, but they were potential for 9 out of what? Out of 12. Therefore you are going to get 10,800. Then from there we have 40 million times 12%, and this was potential for 3 out of 12. It is giving 1.2 million, and then you sum up. This will give us incremental what? Incremental profit. So therefore, our incremental profit will be how much? It is 10,800,000 plus 1.2 million. Sorry, it is 10,800,000 plus 1.2 million. So we are going to get 12 million. So here we have 12 million. Now that is incremental what? Incremental profit. Then let us get incremental shares. Incremental shares. So for the incremental shares, we are going to have the ordinary shares, and we have the preference shares. So therefore, for every shillings 100, you are given 80. What about shillings what? 120 million. 120 million, you are going to be given how many? In this case, you are given how many? Let us see how many you are going to be given. So you cross multiply. It is 80 times 120 million. Then from there you divide by 100. So you are going to be given 96 million. Then they are potential for how long? They are potential for 9 out of what? 9 out of 12. So therefore, how much will you get? Times 9 out of 12. In this case, you are going to get 72 million. Then from there, we converted some. Let us see. From what we converted, they remain 40. So therefore, what about shillings what? Shillings 40 million. So for the 40 million, again is another X here. It is going to be this 40 times this. So it is 80 times 40 million. Then from there you divide by what? By 100. And in that case you will get how many? 32 million. Then you multiply by 3 out of 12. And therefore, how many shares will you get? It is going to be times 3 out of 12. So therefore, you will get 8. Here you are going to get 8 what? 8 million. So therefore, our incremental shares is going to be how much? This plus this. So you will get 80 million. Once we have gotten incremental shares, it is for us to compute what? We compute the EPS. Then from EPS, we can see whether it has increased or it has decreased. And how are we going to compute that? Very easy. So our incremental EPS is going to be given by, you will take this, this is 12 million, then we divide by what? 12 million, we divide by 80 million. Therefore, we are going to get how many shillings? So it will be 12 million, then we divide by 80 million. Therefore, we are going to get shillings 0.15. So that is what we have. Then Mwalimu said, you compare with the basic what? The basic EPS. The basic EPS was 1.48, meaning the basic EPS is more than what? More than the incremental EPS. Therefore, we talk about what? Dilutive. We talk about dilutive. And when we are computing the diluted EPS, we only include what we call dilutive what? EPSs. We include dilutive EPSs. So therefore, let us get the diluted EPS. Our diluted EPS will be given by what? We start with the basic, which is 189, then 600,000 plus incremental profit, which is 12 million. Then from there we divide by what? We divide by there 128 million. Then we add what? 80 million. And therefore our diluted EPS is going to be how much? Our diluted EPS will be 189, 600,000 plus 12 million. Then from there, we divide by, we have 128 million plus 80 million. Therefore, we are going to get how much? We will get shillings, shillings what? 0.97. And that is how you are supposed to compute the diluted EPS. That is how you are supposed to compute the diluted EPS. And with that, I think we have presented a question on diluted EPS and a small briefing on the earnings per share. So therefore, because of time, we are going to stop there, and I wish you a good night.